Good morning, I'm Robert Ryan from Rox Resources. I'm the Managing Director and I'm here to present to you our plan to develop the high-grade Youanmi Gold Project. Youanmi offers significant value. There is a large gold resource and we've developed a plan that'll produce a high-grade, low-arsenic gold concentrate from the Youanmi Gold Project that will be in significant demand on the global market. The scoping study we released earlier this year only includes about 20% of the mineral resource that's available for extraction. So I see a lot of upside when we start progressing through the feasibility stage of the project. We also have the ability to divest some of our non-core assets. We've got the Mount Fisher project as well as the Mount Eureka project that both offer significant upside in terms of exploration, and they'll present significant value for us moving forward. And when you look at the comparison to Youanmi against our peers, we're significantly undervalued when we start looking at the cost per resource ounce, and we're even trading well below the cost per discovery ounce as well. As a bit of a corporate snapshot, the board's headed up by Stephen Dennis and myself and John Mayer, and we've got the appropriate expertise to be able to take the project forward through the development process and into production. We've also built an extensive management team with Matt Anthill and Gregor Bennett, who are experts in the field to be able to advance the project through the feasibility phase. The project's located just outside of Mount Magnet in WA. It is a fantastic corridor to be a part of. There's multi-million ounce deposits all the way through this area. The Youanmi belt has been pretty well unloved over the past 20 years with no significant mining operations other than the recent discovery of Penny West by Spectrum Metals, which was acquired by Ramelius Resources. Youanmi itself, we've done a fantastic job of building a robust resource here of over 3 million ounces, and it gives the project scale to be able to move through the feasibility phase. And it's steeped in history. There's been lots of high-grade gold production throughout the district over a number of years. Through varying mining campaigns, there's been over 600,000 ounces of gold produced from this belt. And it's only 3 kilometers in strike, so it is quite a rich endowment over quite a short span of the area. The mine last operated in 1997 and has effectively closed down when the prevailing gold price was Australian dollars 450 an ounce. So when you start looking at today's terms with the gold price well in excess of 5 times multiple of that, there's a lot of upside to go in and really reform this operation and get it back into production. And it is a significant belt and deposit. There's over 4 million ounces of gold endowment here when you look at the past production and the resource that we've defined. It's got consistent high-grade hits throughout the resource, and we've drilled over 100,000 meters of drilling to really confirm the past interpretations, as well as the new discoveries at Link, Hill End, as well as having a look at Midway as well. The main lode is the initial mining campaign that was conducted here in the mid-90s, and that main lode shows consistent grades, good widths, and some of our recent drilling has confirmed what has been mined here in the past. The Youanmi Gold Project, the scoping study came out in October, and it showed around 4 million tonnes at 5 grams in a mine plan. So it is in a significantly high-grade deposit. We'll mine 570,000 ounces over an 8-year life. And when we talk about increasing the scale of the operation, I see a lot of opportunity to be able to ramp up from the 70,000 ounces that we have in a plan at present. The overall all-in sustaining costs are about $1,500 an ounce. And as we introduce more scale to this project, I expect to see that all-in sustaining cost number reduce. there is a moderate capital requirement of about $100 million. And what we see here is the ability for what is going to be a minor increase in capital can potentially add around a 20 to 30% increase in the overall throughput. And if we start looking at getting a higher throughput from the operation and more ounces per annum, obviously all our costs will drop and our NPV will increase over time as well. But already under the current scaled down version of the project, it is an attractive investment opportunity with the pre-production capex showing a 3 times multiple to the NPV. And then when you look at the enterprise value of ROX in comparison to the project NPV and the attributable NPV at our holding of 70%, it does show that there is a significant upside here at our current market valuation. So we're planning to produce a gold in concentrate. Now, gold concentrates mean that there's significantly less capital to get the project up and running. There's a shorter payback period and there's a shorter pre-production period, and you don't have as many risks in terms of construction costs and the like. It's a simple process. It is a well-trodden process that a number of operators are using, and it does significantly de-risk our planning moving forward. And it will produce a high quality gold concentrate that will be in significant demand. The historical production, as well as the test work that we've completed to date, shows that we'll produce a consistent gold concentrate that runs over 40 grams a tonne gold and sub 2% arsenic. When we look at the historical production, it backs up all the test work we've done to date, and all the variability test work that we've done in the recent drilling campaigns just goes to show that it'll be a consistent producer of a high quality gold concentrate. And the concentrate market is growing, and it's significant already. More than 12% of the world's gold is produced via gold in concentrate. It's forecast to increase over the next 5 years. And one of the biggest issues in around the concentrate market is the ability to be able to find low arsenic gold concentrates. Changes to regulations in China means that any arsenic over 6%, any concentrate with arsenic over 6% needs to be blended down in order to not have to pay a 15% VAT charge. Now, when you look at you and me, at sub 2% arsenic, it is going to attract a premium from traders and suppliers to be able to take the concentrate and blend it with some of the high arsenic concentrates. It puts us in a really niche market where the concentrate at you and me will attract a premium by traders so they can get better payabilities on their remaining portfolios. And the concentrate market isn't something new. It is something that's been in operation in Australia for a very long time. It's no different to a lot of your base metal concentrate production. But even when we start looking at gold concentrates, there's the Deflector mine with Silver Lake Resources that produces the copper gold con. There's the Mount Carlton mine in Queensland that does the same. There's the Costerfield mine down at Mandalay Resources, and they produce a gold antimony con. And there's also St. Barbara Mines, who have just acquired the Bardock Gold Project, and that was a high-grade gold concentrate as well, where the payabilities were very significant on what the concentrate production was forecast to be. So it is not a strange process. It's something that's in operation throughout Australia at the moment, and we see a lot of upside in being able to use the UME gold concentrate and position the project well within traders in the future. Now, when you look at conservative attributable enterprise value, and if we just look at the measured and indicated ounces that ROX Resources have in the ground, we are currently valued at about $34 an ounce. Now, if you were to include the inferred resources as well, we would basically be about sub $14 an ounce on EV per resource ounce basis. If you're just looking at the higher end, higher quality ounces, and you compare that with our peers, we have higher grade and we have more ounces and we have a more attractive valuation. So I see a lot of ability for us as we start to increase the project financials and the project metrics as we progress through the feasibility studies are getting the re-rating that this project deserves. And when we talk about the scoping study and the availability of extra resources to have within the plan, we've done a number of stope optimizations to have a look at material that will form part of a larger mining plan. And as you can see in the picture below, there is a significant amount of inferred resource that we can look to drill out and add to the current mining plan. Now, if you can consider having a look at the picture below, there's more than 50% extra ounces when we start looking at the overall project and the ability to upscale the project from here. Now, whether we look at that as a longer life, so increasing the current 8-year mine life out to 12 or more, or whether we increase the production rate to get that up, those are the options we'll consider as we start transitioning through the feasibility process. The Mount Fisher and Mount Eureka belts, they're highly prospective areas. We recently released a resource upgrade for the gold resource here, and there's 187,000 ounces at 1.65. It does show that there is a lot of exploration upside at Mount Fisher, and there is the potential to really go hard at the exploration here and look to significantly grow that. However, we will look at all options in the future, whether we look to advance through exploration or whether we look to divest the tenements to be able to fund our future work as well. We also have the northern ground with the Cullen joint venture that stretches to the northern part of the basal contact that was recently acquired, that Cannon Resources own and was recently acquired by private equity group Kinterra. The northern extensions of that basal contact are highly prospective for nickel, and I'm sure there'll be a lot of interest from Kinterra as well as other parties at looking to acquire that exploration ground and grow their nickel resource there. To wrap it all up, Rox does offer significant value, and the quality of concentrate that we'll produce here will be in significant demand in the global market. I've already spoken to a number of off-takers who do show interest in the UME project and are looking to start discussions early days so we can get the project moving forward. There is significant upside when we look at the mining plan and the ability to be able to increase the scale and the life of the asset by drilling out our inferred resources. There is ongoing exploration as well. There's a lot of area within the UME district that does present exploration upside. We'll look at selling our stake in Cannon Resources that will help fund our feasibility studies. So with an additional 3.8 million, as well as the recent capital raise, that'll put us well funded to go through the full feasibility process, as well as we start looking to run potential divestment of non-core assets to take the funding options even further. We offer attractive value when we start looking at our resource enterprise value against our attributable resource. And we think as we continue to progress the project and take it through the feasibility process, that we'll continue to gather upside and gather the momentum required to build this project in the next few years. Thank you very much, everyone. And I'll open the door to any questions.
Rob, there is a question. The refractory ore stigma still seems to stick to the UME resource. Some claim it's double refractory. Could you comment, please?
Yeah, so the UME gold resource, it's not double refractory. It is a highly, it is an easily oxidized gold resource. So when you start having a look at the gold in concentrate and producing a gold in concentrate, you actually remove the whole need to go down a refractory processing solution, because there is significant demand globally to be able to blend, high quality gold concentrates with, lower gold grade copper concentrates, as well as, high gold, high arsenic gold concentrates, and process them in China, Korea, Japan, as well as India, and even in Africa. North America has POX circuits, as well as, there's Oceanic Gold in New Zealand that also treat this style of gold concentrate. So there's a lot of optionality for us to be able to produce a gold con, remove the necessity to be able to process it and oxidize it on site, and really get the value to shareholders a lot earlier.
Rob, the second question. ROX is aiming at delivering a PFS next year, but assuming some exploration success, what could be delivered? A feasibility study or even a DFS?
Look, we don't want to overpromise. One of the things we want to make sure that we will do is we will do the significant planning that is required to get this project into a feasible investment scenario. We've got the expectation that we've got a long life project here that will be able to produce much more than the 70,000 ounces per annum than what we've got in the current scoping study. And we want to make sure that we have the reserve life to back it up, and we've got the adequate mine life to be able to justify an investment decision here that is going to look at a good gearing as well as a good equity turnout, and really, as I said, really get a robust financeable project here.
Rob, a question from anonymous attendee. Why do you think the market has valued ROX at such a low dollar per ounce?
I think a lot of it goes with, having a look at the current scoping study. When we start looking at the potential upside we have on the scoping study, I don't think that's been taken into account when we've gone to market. Now, having a look at the larger resource base here and even showing those recent optimizations, you can see that there's a significant amount more gold here that is available to be able to grow the life of this project. And that's not just growing in terms of mine life, it is growing in terms of scale as well. So I think the more that we do the work and we do the engineering to understand this project, and really look to, upscale it to a point where we can get a higher ounce production target, I think the market will come along for the ride.
Rob, Hawke's Point is a cornerstone investor. Does Hawke's Point maintain full support for ROX and the UME project?
100%. So I think what you'll see in the recent capital raising is Hawke's Point have come along to maintain their holding within the company. So, there will be an EGM next year whereby there'll look to be approval for them to maintain their 13% holding. Now, as we move forward, we need to make sure that we build out the register as well, so that we get more institutional investment. So the whole reliance to build the project isn't just on Hawke's Point as well. So that'll be our targets over the coming 12, 18 months, 2 years, as we look to build out the register and get a quality of investor involved with the stock who will look to fund this project through to production.
Rob, a question regarding the Grace deposit, which has been highlighted as a significant resource and an important early opportunity for gold production, but not reflected in the scoping study with only 7,000 indicated ounces. Could you comment, please?
So the Grace discovery, and it is a fantastic discovery, and it's out in the granites. There is an oxide opportunity there that we can potentially look at mining a small open pit on. What we want to do is we want to make sure that we drill it out effectively, and we do have a robust starting base to be able to execute a plan off. There was some previous mentions in and around toll treatment of those of the resource and the like. However, when we start looking at the gold market at present, with the recent cost increases with a lot of the mining contractors, as well as the pressures put on some of the current operators, and toll treatment probably isn't as readily available as what it was 12 months or 24 months ago. So what we really want to do now is focus on building the resource and reserve at the project and look to add that as one of our primary goals as we start moving forward with the development of the asset.
Rob, another question. Long-term shareholders have seen a decline of share price. Why should we continue to support the business?
Look, where Rox is now, it is a fantastic investment opportunity, and that's hands down. I can't comment on the past of what's happened here over time, but what I can say is the future of Rox is bright. We've got a fantastic asset here. The scoping study, I don't think really shows the full picture of what we can achieve and how we're going to move this forward. So I'll say to shareholders who have obviously borne the tough times to continue to follow the company, because I dare say that as we continue to progress down this path and continue to develop the asset and to continue to conduct our feasibility studies, we will be able to unlock the value of the project moving forward.
That's all.
Right. Thank you very much, everyone. It's been a fantastic webinar, and it's been great to share my thoughts on the UME Gold Project with you, and some fantastic questions have come out here as well. So if anyone's got any further questions, feel free to jump onto the email link below, and we'll make sure that we'll get your questions answered. Thank you very much, everyone.